Hello friends, my name is Dr. Bharath. The videos are meant for the benefit of society. As you all know, we conduct question and answer sessions for the benefit of people, and many times after answering many questions, many other questions will be left behind, which will be very interesting, useful for everybody. Today we are answering a couple of them, and title of today's video is, can we buy blindly the stocks that are common in Nifty and Sensex? This is a very common misconception, thinking that Nifty stocks are the best in the whole country. Now let us look at it. These are the common stocks in Nifty and Sensex. I am starting with Reliance, and number 8 is ITC, 9th is HUL, and Maruti Suzuki 16, and going down 17th is M&M, 24th is Power Grid, and NTPC 25th, 30th is Dr. Reddy's Lab. If you look at the returns from certain stocks in Sensex and Nifty, Sun Pharma in 10-year period has given only 10%, Power Grid 10%, NTPC 1%, Dr. Reddy's Lab 10%, ITC only 6%, Wipro 12%. They are not great returns when compared to many other stocks. Nifty 50 list is formed based on the 50 stocks with the highest market capitalization. Stocks are not included in the index based on which is the most profitable for shareholders. To give an inkling about this topic, I am giving you a list of some stocks which were in Nifty earlier but removed, and the names are BHEL, SAIL, GAIL, Vedanta, Indian Oil Corporation, Yes Bank, HPCL, etc. All these stocks have gone down from Nifty to Nifty Next 50 and Nifty Mid Cap 50 entirely because the share value came down and the profit and loss came down and the turnover of the companies came down. That means all stocks in Nifty are unlikely to do well. I am going to give you a list of stocks which are in Nifty but not in Sensex, and they are Britannia, Divi's Labs, Eicher Motors, Tata Consumer Products, out of which there are some good stocks. And the moral of the whole story is, just because a stock is represented in Nifty, it does not mean it is profitable. You have to do your own fundamental analysis, find out the profitability and other factors in fundamental analysis before thinking of buying, especially for long term. The next question is also very interesting. Why Nifty 50 is still at 17,500 range even though the share market is there since 30 years? The Nifty index was launched in April 1996 with a base value starting at 0.1000. So it has been gradually increasing to around 18,000 as of now in 2022. The CAGR of the Nifty 50 index is 11.6% per annum for the last 26 years. If you look at the post office and bank deposits, it's much higher. Also, the thumb rule of stock market appreciation is inflation plus the bank rate of interest. So 11.6% in Nifty is a very good improvement. Also to note is, when 11.6 is the appreciation in Nifty, individual stocks will be in the range of appreciation of somewhere around 15 to 30. This is a Nifty 50 index graph since 1996. The next question. Hi sir, question is, should we consider high beta value shares for short term or fundamentally strong shares? Very good question indeed. Probably somebody with lot of experience must have asked this question. First thing is high beta. Second one is fundamentally strong shares. First question is, for what purpose you are looking at high beta and fundamentally strong shares? whether it is long term or short term. For long term, beta value has no meaning. You only need to concentrate on fundamentally strong shares on a long term basis like 5, 10, 15, 20, 25 years. Whereas in short term, you are looking for fundamentally strong shares, no doubt about it. But if you want to get more profit, you must concentrate on high beta value shares. But here is a very important caution. Just the way the beta shares are going up in a whiz, it can also come down in the same manner. That means it is a double-edged sword. For example, if the beta value is 1.5, market goes up by 1, the share goes up by 1.5. Market falls by 1, the share falls by 1.5. Our suggestion is, if you are going to follow all the rules of technical analysis, then taking the high beta shares, no risk at all. However, in case you miss it, you are going to make a huge loss. Somebody has asked a fundamental question. First time I'm investing in stock markets. I have knowledge about stock markets, but I'm afraid what to do. Very good question. Probably this is the story of more than 30, 40, 50% of the population in India. They have fear investing in stock markets. Our suggestion is, don't invest a huge amount right in the beginning. You will go SEP mode, and your investment or your savings amount a month is 5,000. Start with that, buy 1 or 2 blue chips, and next month buy the same amount, 2 more shares, like that. And at the end of the year, maybe your investment is less than 60,000 rupees, and you will be very comfortable, because by that time you would have understood many things about stock market. A channel member is asking, are you teaching the 30 days moving average in YouTube, or we have to take the workshop? Very good question indeed. In fact, to teach technical analysis or fundamental analysis, probably it will take more than 7 to 8 hours, with lots of examples, with lots of live sharing of the websites. In the YouTube, nobody looks at the video more than 5 minutes. That is the statistics. And if you talk about it in YouTube, you will be getting only half information. The right technique is taking a detailed course. Whatever we speak in the YouTube is in tits and bits, and suggestion is you must take fundamental analysis, technical analysis, 30 days DMA, everything very seriously. All the possibilities has to be studied. In case this happens, in case that happens, what should be done? Because it is your valuable money. The next question is, sir, how come some scripts flare up in the browsers on certain occasions when their current fundamentals or financial positions are not so strong? Say, for example, Paytm, Zomato. Again, a good question. When the market is soaring, when the Nifty is going, when other stocks are also going up, even fundamentally not strong shares will also start going up. I always give this example. There is a race going on, lot of horses are running. In between the horses, there are some donkeys, cows, jackal, and pigs too. Similarly, recently Paytm and Zomato had been beaten down, and they are now trying to go up because of the rubber band effect, because it was pulled down for a long time. Now it is trying to go up, but not to the old levels. The next question is from a beginner to share market. Sir, I am watching your YouTube videos 6th time. It's very interesting to watch your class. We are blessed to have you as a guru. Very good observation. Our suggestion is, take the stock markets very seriously. This is an alternate source of money. Especially if you miss long term, you will regret on a lifetime basis. Sir, I am June 2022 batch. I am very inspired by your speeches, sir. My son is in USA. He wants to invest from there only. So which app he can use there like Zerodha? Very good question. Here I need some more details. I presume your son is still the citizen of India. If he is a citizen of USA, he cannot invest in stock markets in India directly. Now, assuming that he is an Indian citizen, whether he is in USA or in India, the app that is being used in India, which is online, can be used from USA too. Zerodha can be used, Upstock can also be used, plus any other platform. Only thing is, you got to inform the platform that you are an NRI. Being an NRI, there are certain things which you are not allowed to do, including intraday trading and futures and options. You can only take the stocks, keep it with you on a delivery basis. The next question is very interesting. I deliberately put it as a last question. And the question is, sir, in short term, I have invested 50,000. 5 years later, how much money I am likely to get? The question is so interesting. I want to leave that question for you to answer. For example, do you feel the question is alright? Do you feel the question is complete? Do you feel that anybody can answer this question? Or is there any mistake in the question? Please type it in the chat box. If you are not the member of Stock Market Academy channel, this is the time to subscribe, press the bell icon, send this video to all your friends, and finally, video is good, press the like button. Thank you for watching. Bye bye. All the best.